It's a good problem about cash flow statement, basically finding out errors, mistakes. Here you have the following extract is taken from a draft version of company's statement of cash flows prepared by a trainee accountant, and this is what you see: profit before tax, depreciation charges, then profit on sale of property and equipment, increase in inventory, decrease in trade and other receivable, increase in trade payable, cash generated from operation. Okay, let's see. 4 possible mistakes that may have been made by the trainee accountant are listed below. The profit on sale of property, plant and equipment should be subtracted, not added. The increase in inventory should be added, not subtracted. The decrease in trade and other receivables should be added, not subtracted. The increase in trade payables should be subtracted, not added. Which of the 4 mistakes did the trainee accountant make when preparing the draft statement? Let's see. Okay, so this is the question. So with the available information, let's ignore the brackets and all, because we are going to do it right. Then we'll compare it with what that trainee had done. Then we'll identify where there is a mistake. Okay, so the corrected extract should be like this. We are going to find the net cash flow from operating activity. Profit before tax, it is 484,000. Then depreciation charges, it should be added back because it is a non-cash item. Okay. Then profit on sale of property, plant and equipment, this is an item which should come under investment activity, not under operating activity. But since it is already included while arriving at the profit, what we have to do now? We have to deduct it. Look at here, we are deducting, but what trainee did? Trainee has added it. Okay. Next, increase in inventory. See, increase in inventory will boost the profit, but there is actually a cash outflow for that. Okay. It has boosted the profit, there is a cash outflow. Both are contradicting, right? When there is a cash outflow, how it can boost the profit? So, the effect that was given should be reversed. So, what we should do now? We should deduct it. We should deduct it. Because increase in inventory just gets added with the profit. Now, we are removing it from the profit. So, 74 we are deducting. Trainee also has done it correctly. Next, decrease in trade and other receivables. When trade and other receivables are decreasing, it means cash are coming in. It should be added. This 41 should be added. But what trainee did? Trainee deducted 41. Okay. Next, increase in trade payables. It means you are getting funds or you have not paid for certain purchases. But your statement of profit and loss would have captured the purchases, would have reduced the profit to that extent. But for that, you have not made the payment. So, increase in trade payables is akin to cash inflow. So, it should be added. Okay, it should be added, and trainee also did it correctly. Then we get cash generated from operations, which is 772. What trainee arrived is 760, but what is the correct one is 772. Let's record where the mistake was committed. The mistakes made by the trainee accountant while preparing the draft statement is: profit on sale of property, plant and equipment should be subtracted. She added, it should not be added, it should be subtracted because that goes under investment activity. For that reason, we are removing it from operating activity. Then the decrease in trade and other receivables should be added, not subtracted, because that is akin to inflow, cash inflow, right?